Hey everyone, welcome to the KE Report in a daily editorial on Tuesday, June 10th, chatting with Craig Hemke. Going to be talking precious metals as we always do. Craig is the founder and editor of TF Metals Report. To follow along with what he's writing, click that link in the show notes. Craig, precious metals continue to do very well, albeit gold hasn't really been doing much for the last couple months. Silver, though, and the underlying stocks, gold stocks, silver stocks, even the juniors, they are doing quite well, especially the juniors and those stocks that had lagged over the last year plus of very positive moves. Silver now above $35 an ounce. On the futures, silver is actually almost at $37 an ounce, but that $35 level, pretty crucial. And hey, it's outperforming gold. As I said, gold's not doing much. So, Craig, in terms of silver, what are you seeing? This continues to be a very strong move.
It is a very strong move. It's been a lot of fun to watch. Anyway, nice to visit with you guys as usual. Happy Monday. Yeah, it all started last Monday, and we were talking about it when we recorded last Monday. You had a big jump in silver that came on that first trading day of the new month, and we're all like, "Wow, okay, that's crazy. Let's see what happens next." Day, another big jump Wednesday night into Thursday. And now another decent rally today. So we keep expecting to see, okay, we're going to get a pullback here, a little dollar strength and, come, and it's not happening. And it's almost feels a little rotational, that like, oh, we watched this gold silver ratio go over 100 for a while and now it's plummeting. And, I've got people on my site that trade that. I don't know if it translates to institutions and hedge funds and things like that, but they're like, I'm going to sell some of my gold here and buy some of my silver, trying to play that trend. It almost feels a little bit like that. But the main thing is, and again, another thing that we've discussed, which again, just making the point that everybody should listen to these things every week because we do it every Monday. But another thing that we've discussed is how silver kind of creates its own momentum. Everybody knows, oh, it's like rocket fuel, it's gold on steroids, all these different cliches that people have thrown about over the years. But in some regards, it's true. But it'll sit there and do nothing while you watch it. And it just sits there and stares back at you or goes down. And you're like, well, why isn't it going up? Well, because nobody's buying it. So it becomes like its own momentum generator once it starts going up. It starts to go up, it gets people's attention. Goes up a little bit more. Hey, let's buy some. Goes up a little more. Hey, wait, I'm missing out. I better get in. And it creates its own momentum. And again, I think I recall this with you guys last week. It's like, the law of inertia or whatever, the motion, an object at rest will remain at rest until a force is put upon it. And that's kind of how silver trades. A force is now being put upon it, at least the early stages of it, and it's starting to collect its own momentum. And what we can hope is that that continues to play out.
Well, Craig, I think you make a great point about the momentum, feeding the momentum. That's what we see in a lot of sectors. That's what happens in AI tech stocks. That's what happened in the meme stocks. That's what happens in any sector that's really getting a bid. If semiconductors are hot, people for some reason think, well, the price has gone up. I want to buy even more. And that definitely happens with silver. I want to rotate down into the ETF SILJ just briefly because I think it's the best tell of what's actually happening in the silver stocks. It's got a better balance than most of the other ETFs. And if you look back at what happened in the silver squeeze back in February 2021, the SILJ got up to 1884 as a high. So a big run. And that was in the anticipation at the time that silver was going to blast from 30, which it was just getting to at that time, and go right to 50. Obviously, that didn't happen. We saw a big correction in the space. But I noticed last week that SILJ finally got back above the 2022 peak, which was 1548. It got to 1553, and it started feeding on that action last week. And to the point you just made about momentum, feeding on momentum, are people finally going from, hey, silver's going to stay in the 30s to, hey, silver's going to go to 50 this time? Is that kind of a setup in people's mind finally playing out where the momentum is now fueling into the FOMO?
Yeah, and it takes a little while for that to ripple through. The longer gold has stayed higher, for example, people have this kind of had to reset their own expectations. Like when it first got to $3,000, it's like, oh boy, can it stay here? Or even remember just a couple of months ago, it got to 3,200, 33. And all these people out there immediately calling for a pullback, down to 27 or 2,800, and all that stuff. gets into the investor mindset that, okay, all these mining shares might have made X amount of dollars last quarter, but what have you done for me lately? And if prices are going to fall, then, the margins are going to collapse, and, all these different things go into it. And so, I mean, just now, I mean, like it was like 5 minutes ago, but in the present, people are finally starting to get kind of used to this $3,000 plus gold and moving their expectations forward. And an important part of this, in terms of the institutional investor, is how the big investment houses and investment banks, anybody with like sell side research, those folks, they have to start believing it too, because they're the ones that are putting out the pieces with the price targets. Oh, we have a buy on, such and such at $60 a share, and it's currently 42. Well, how do they get that buy? And that's, how do they come up with that price target? Well, the analyst that writes that report isn't like pulling the numbers where he expects gold or silver to be out of his own rear end. He's going to cover himself or herself, they're going to take whatever that bank or firm has for their target for the underlying metal. The guy's not doing it himself. He's, get fired, how'd you come up with that number that gold was going to 5,000? That's not what our firm says. Well, that's what I think. And all of a sudden, all the firm's customers are led astray. So he's going to cover himself by going with the bank or the firm or whatever, what their gold price target is. So now that those banks have started to catch on, you all see, UBS and Goldman Sachs and all the rest saying $3,500 gold and stuff. Well, that starts getting reflected into the price targets that then the equity analysts put out. Well, we don't have that yet in silver. That's why this is kind of a process. Yeah, you and I, all three of us, we all see silver at 37. We're like, okay, well, let's see. From here, we get to 39, and above 39, we might start talking 49. And we start getting excited. But the analyst who covers, you name it, Pan American Silver, is still basing his earnings per share expectations off of whatever his firm thinks silver price is going to, which is probably not 39 or 49, at least not yet. So that's how you get this lag. And again, that's all part of the frustration. That will be fixed over time if we are correct in the persistence of this bull market, but particularly in silver, we're not there yet.
Greg, I find this also interesting where gold and silver, they were going up, or gold especially was going up last year, even early this year, for a lot of fear-based reasons. We saw U.S. markets in a really tough position, but markets are coming back. They have come back, not quite to all-time highs, but the S&P is back to 6,000, and yet we're still seeing this very friendly environment to precious metals, and then also some of the industrial metals have done pretty well. So precious metals, well, I guess there's still fear out there. They also seem to be going to a beat of their own drum. What do you take from this environment where fear drove precious metals higher, really drove gold higher, and now it seems like a bit of a different sentiment that's now driving silver and the silver stocks and the gold stocks and everything else?
Well, regarding the fear component, that's always going to come and go, the safe haven demand, that sort of thing. Gold has been driven this year, if we're just going to start back in January, by two main things: a continuation of central bank demand, which has put kind of a physical floor under price. But maybe even more importantly, and then this trickles down to all the other commodities. This is a pretty sharp drop in the dollar index we've had since January. I mean, we're up at 110, maybe 111. Last week, we're back down to 99. That sets a lot of the kind of CTA algos to just be buying anything commodity related, gold and silver, platinum, palladium, you name it, copper. So there are other, I guess what I'm saying, Corey, is the fear trade kind of ebbs and flows, but this underlying what has kept a solid bid, even for gold futures, are those other two things. It's just this idea that there's a physical demand that is unrelenting in size, and that has, really exacerbated some of the physical supply issues in London. Remember the story from February about delivery delays and that sort of thing. So that, that kind of helped too. But again, that falling dollar index has played a huge role. And that's, as we go through this month of June, it's going to be really important to watch gold, but really silver. And we got 3 weeks from today, the month of June, and the second quarter will come to an end. And man, if we paint the monthly charts and the quarterly charts with some of, new highs, that's really going to that's really going to help. That's really going to turn the focus on. Remember we talked about this? Remember at the end of 2024 and even back in 2023? Remember the first quarter of 2024 when gold finally made new all-time highs on the monthly and the quarterly chart? And I mean, that was at 2,300. Now we're $1,000 higher. That's the same kind of thing we're hopefully looking at in silver by the end of this month.
Yeah, Craig, I think you were one of the few guests to really highlight with us. It was actually the end of 2023 in the fourth quarter, that November and December. That's when the new daily high, weekly high, monthly high, and quarterly high happened in gold. It predated the move that we saw in March by a whole quarter, but it was really the bell ringing that things were taking off. And it looks like silver is setting up for one of those kind of months and quarter end where it's going to be above that 35 resistance, let's hope, and then maybe then some. So the other thing that I want to ask you about is you mentioned copper, platinum, and palladium. Those are also doing quite well. I mean, right now, at the time of this recording, copper is up at 491, but platinum and palladium reach up 3 and 4%. They're up in the 1200s for platinum and almost 1100 for palladium. Is there a sympathetic bid going on in these metals because of possibly a rosier outlook on the economy than people had, let's say, 2 months ago?
Yeah, I suppose that's part of it, Shad. That kind of global economic, let's get our commodities. It certainly applies to copper. And that, that's got its own completely unique set of fundamentals and people, trying to look forward from, EV demand, and all this kind of stuff. But platinum and palladium are kind of existing in their own little world, a little bit like silver in a way, in that, like I said, I almost kind of get this, and again, I can't quantify it, but I kind of get this sense that, while gold's kind of sitting here kicking the dust and kicking stones at 3,300 plus and kind of trading in a consolidation pattern still, that there's a little bit of at least a rotation of interest into the other three metals in the complex. And, that can continue for a while. I mean, that certainly could. And then gold may just come up and join them. I mean, it certainly has been the other way around, right? For the first 5 months of this year, it seemed like gold wanted to go up almost every day. And we're sitting there watching silver, platinum, palladium going, geez, these things don't do anything. So we may, just be getting started in this kind of catch-up mode for the other three. Platinum in particular, I know a lot of people on my side have been following. I see a lot of stuff, people on Twitter, X, intrigued by it as well. Do you know people actually follow a gold to platinum ratio? I had no idea. I mean, I've never really paid that much attention to platinum, but it'll be interesting to see if there's kind of more of a movement to push. It's like when the gold silver ratio comes down, is it because they're all falling, or silver's not going down as fast as gold, or is gold just kind of going sideways and silver's catching up? And so when these other metals, are they just catching up relative to gold? That would be the trend I'd want to see over the next couple of weeks.
Fair enough. Craig, it's also interesting, again, to get all this data that we have. Jobs report last week, inflation data coming this week, plus another important Fed meeting where we'll get the quarterly dot plots released. None of this does seem to matter because we're still kind of stuck trading against what's going on more in the political side of things. But anything on your radar that will actually matter to these markets, either confirming or changing any of these trends?
Well, as we go in later this week, Wednesday brings the latest CPI numbers here in the US, and Thursday is the PPI. So those will move the needle. That'll get the bond market moving. They'll get the dollar index moving. And, if they're soft, and there's reason to think that they might be, you might get a weaker dollar. Any day this week where the dollar's down 50 cents or 60 cents and moving down toward 98 where it bottomed last time, pretty hard not to see where the metals aren't rising, at least during COMEX hours while that's happening. As we get into next week, then the fun starts because, yeah, like you said, it's a June FOMC meeting, and on the quarter, you get that summary of economic projections, which includes the dot plot, which includes their best guesses as where inflation's going, the unemployment rate, how many rate cuts they see. For now, here we are 9 days out. There's still about 2 chances in 3 that there will be a Fed funds rate cut by the time we get to the September meeting, it's not overwhelming, but there's still a reasonably high likelihood that there's at least 1, if not 2 rate cuts coming later this year. By next Wednesday, after we get a chance to look at the SEP and hear Powell talk, It's either for sure going to be 2 or it might be closer to 1. And boy, that's going to move the needle for sure. These, I would add a couple other things. Also, next week, we'll bring New York Stock Exchange option expiration day, third Friday of the month. So all the listed options on, all the big mining shares, all the big ETFs, that'll usually brings considerable volatility as well. And then for silver, July silver is the current front month. As we get into the latter part of this month, we'll have COMEX option expiration day and the July silver going off the board. So there are a lot of things coming up later this month that people are going to have to be mindful of. And the fun really starts Wednesday with the latest inflation data.
All right, Craig, some things for us to watch out for. Who knows if they're actually going to move markets? And in all fairness, this recent inflation data has been kind of boring in itself, too, which I think the markets, in a way, also have been embracing because of, again, all the volatility that has been coming outside of just the data. But also, when we look at this data, it's so confusing to know what's getting pulled forward and what is not. But right now, hey, we keep talking about precious metals and they're continuing to do very well, and now we're seeing that natural rotation in a way almost down the food chain as gold continues to consolidate. Again, Craig Hemke, founder and editor of TF Metals Report. Click that link in the show notes to follow along with Craig. Craig, great chatting with you. Hope you have a great rest of your week.
Thanks, guys.